Ethereum is looking oversold, and we are now waiting for a buy entry signal to load up on Ethereum. In this video, we cut through the noise and layer the complete picture on Ethereum: structure, momentum, volume, and the exact price levels that will confirm whether Ethereum is a good buy right now. Since the 6th May high, we have had 8 days of selling with 6 consecutive days. If we look back at recent history, we only see a few days of selling before buyers step in. The last time we had 6 consecutive days of selling, on 17th March, we saw strong bullish candles follow. The fundamental reasons for owning Ethereum are sound: long-term institutional ETF adoption, dApps and smart contracts, its own decentralized blockchain, and a very active development community. However, crypto does not exist in a bubble. Macroeconomic factors, such as the sharp rise in U.S. Treasury yields, take money away from risk-on assets like Ethereum. Also, the rally from late February to mid-March meant that some profit-taking was inevitable. You will have noticed that February's monthly range has been engulfing Ethereum's price action for over 4 months now. We are retesting February's midpoint, and the bulls still have the advantage. Several closes below February's midpoint would flip that advantage in favor of the bears. The selling has slammed right into the floor, and Fibonacci support sits between $2,095 and $2,112, and this is where retail traders and investors have the advantage. Institutions can't move quickly. Their large funds take time to accumulate a position. As retail investors, we can be nimble. We can spot opportunities like this one on Ethereum and profit from them before the big money has time to move. Even better, position yourself before the big money positions itself. Looking at our signals, the last buy alert triggered on 7th April with a strong bullish candle, and that produced the April 18th top. Since then, we had a sell trigger alert on 15th May, which is still playing out. If we can get a reversal buy alert, that would give us confidence that we have a bounce. Reinforcing our Ethereum market analysis, 6 days of selling hitting both a Fibonacci support zone and the dominant February midpoint should see a bounce. This is the bullish sign we need to show that buyers want to take control again. Bitcoin dominance means that where Bitcoin goes, the other altcoins follow. Bitcoin is positioning itself to go to 100K. We covered that in our last video, and this will mean all cryptos push up. Buying this dip is the smart move while panic sellers exit. When we look at the monthly ranges, do these declining ranges look like heavy selling to you? From 1,150 to 719 to 4,723 to 444 and now 161 in May, which is still to finish. No, it looks nothing like heavy selling, but rather tighter and tighter compression, getting ready for an explosive move. The weekly swings show a strong reversal from the 6th February low to the 17th April high, and now a corrective wave pattern. A bounce here will allow Ethereum to begin its next bullish run. The first thing it needs to do is reverse these 6 consecutive down bars. That would be a good sign that this minor correction is over and that the Fibonacci support zone is holding. Taking out the 6th May high would be strong evidence that the bulls are firmly in control. So the question is, will it bounce? Keep an eye on this chart this week. While Ethereum is trading below the 2026 anchored VWAP, it remains weak. Another signal we are looking for is a close above this level, which is around $2,350. The 2026 line may act as a magnet to draw prices back up and through. We will see if that happens. So, summing up, are we oversold on Ethereum? 6 consecutive days of selling, and the price structure tells us it has every chance of bouncing at our Fibonacci support zone between $2,095 and $2,112. The dominant range of February continues to overshadow price action, which is currently testing February's midpoint line, another reason to expect a bounce. If Bitcoin were to rise, the Bitcoin dominance effect would draw up most altcoins with it. Fundamentally, Ethereum is sound, and we view its current decline as profit-taking after the late February to mid-April rally. That is supported by our volume range analysis, which tells us this is not seller strength, but rather compression of ranges ready to spring up when the time is right. We want to see Ethereum reverse these last 6 consecutive down days and work its way back up above the 2026 anchored VWAP. A strong sign of bullish control would be a break above the 6th May high at $2,429. But first, we need a buy alert produced by our proprietary indicator to confirm a reversal back up. We will stand aside while we wait for this. As retail traders, we have the advantage of being nimble and acting fast on opportunities like these before others see them. This could be a great opportunity to position yourself long, both for short-term profit or as a longer-term play. We hope this video has helped you. Before you go, join our free daily crypto trading newsletter. It's just a 5-minute read and it will keep you ahead of what's moving in the market. The link is above and in the description. If you found this analysis useful, subscribe to Crypto Trading Mastery and hit the notification bell so you don't miss our next daily video. Thanks for watching, and we'll see you in the next one.